just to give a little bit of life insurance and how you can use like life insurance later in the future to become the bank. To give you an example, I'm working with Ryan and I'm putting around $2,000 a month in a life insurance policy, because later I can use that money. I can borrow 90% of it and lend out to other people. And then I'm borrowing, for example, I would pay at like 3% interest as I borrow from my life insurance. But if I'm giving that to, for example, to Tiago to do a flip or something in Augusta, for example, and I charge, let's say 10%, then that money is making me money, while I'm borrowing from myself. And the way that the life insurance policy is set up is you're making money off of all of the money that it's in your account, whether you're leveraging it or not. So that's one good thing about using life insurance, when you become your own bank.
Yeah, a quick question about that.
Diego, is that what it's called? The infinite banking?
Infinite banking, yeah. Yeah. Naive, sorry about that. What was your question?
No worries. So I'm looking into my my life insurance, right? Now, I think Felipe had talked about this on his previous video. Life insurance has to be a whole life insurance, right? If you have a term life insurance, you can't take money out.
I believe that is correct. Yeah.
Right. All right.
Mm-hmm.
So yes, Sebastian, just make sure you get a whole life insurance, because I've been paying for a term life insurance for about 15 years, and I just found out I can't use that money, which kind of sucks.
Man.
Yeah.
Thank you. I'll think that. I'll take that.
I think term life also has an expiration date. You buy it for the next 30 years or the next however many years.
Mm-hmm.
And it ends, and whole life does not.
Yeah. And it really depends, exactly. And it also depends what you it depends what you guys decide later, to, like, if you're using life insurance as just life insurance, where if you die, your family gets $1 million or whatever, or if you're using life insurance for infinite banking. Those are two different types of things. Because prior to me wanting to use it for infinite banking, I was just putting, let's say, like $500 a month on life insurance. Where now, because I have changed that perspective, now I'm putting like $2,000 to $2,500 a month. Because I wanted to build a cash value that I can then I can later borrow against it.